What are the tax consequences of working as a 1099 independent contractor versus a W-2 employee? I'll talk about that in this video. My name is Katherine. I'm a CPA and I help accounting majors like you through graduation and beyond. This video was released on April 15th, so if you're watching it on the day it came out, happy tax day to my fellow Americans. I posted a video a few weeks ago about the life consequences and pros and cons of working a W-2 versus a 1099 job. Definitely check that one out first if you haven't yet, so you can figure out what the differences are before we talk about taxes. So what are the tax consequences? I'll start by talking about the piece most people don't think about, FICA taxes. FICA is what we call the combination of Social Security and Medicare taxes. As of 2024, Social Security is 12.4% of wages on the first $168,600 earned per year, and after that, you pay zero Social Security taxes for the rest of the year. The income limit gets adjusted annually for inflation, so if you're watching after 2024, the number will be different. Medicare tax is 2.9% of all wages earned with no cap. FICA taxes then are 12.4% for Social Security plus 2.9% for Medicare for a total of 15.3%. As an employee, you only pay half of these taxes for a total of 7.65%, and your employer pays the other half. When you're a self-employed independent contractor, you have to pay both the employee half and the employer half, the total of 15.3%. You also get to deduct the employer half that you paid when calculating your federal income taxes, but we're not going to get into the weeds with that here. Suffice to say, as an employee, you only pay your half of 7.65%. When you're self-employed, you end up paying somewhere between 13 to 15% in FICA taxes. As an employee, you don't get to take basically any deductions related to expenses you pay for your work. You cannot deduct the cost of the work-appropriate clothes you buy, or your mileage to and from the office, or any lunches you have with your coworkers. The portion you pay for your employer-sponsored health benefits are likely taken out of your paycheck pre-tax, along with your traditional 401k contributions, and that's reflected on the W-2 you receive at the end of the year. So there's nothing special you have to do for these when you file. If you use your personal car for work-related purposes after you get to the office and your employer doesn't reimburse you for that mileage, you might be able to deduct those expenses if you drive a ton of miles unreimbursed and you itemize your deductions on your taxes, but suffice to say, only a very small percentage of taxpayers would actually receive a tax benefit from that. As someone who's self-employed, all expenses related to your business are deductible on your tax return. This includes all business mileage you drive, some portion of your phone and internet bills, and all software you use for your business. This could include a website, email, a Zoom subscription, and any industry-specific software you use within your business. You also get to deduct the cost of advertising, anything educational you buy to learn more and improve your business, including courses and books, and generally anything which is considered an ordinary and necessary expense to run your business in your industry. An important note, while businesses can deduct these expenses on their tax return, that doesn't mean that everything they buy for their business becomes totally free. Let's do some really basic calculations as an example. If a business made $100 and had no deductions, and let's say they were in the 10% tax bracket, they would get taxed on 10% of that $100 or $10, meaning they would get to take home $90 profit. If they earned $100 and had $10 of expenses, and still in that same 10% tax bracket, they would only get taxed on the $90 profit. 10% of $90 is $9 tax, meaning they take home $81 profit. In this case, deducting the expenses only saved them $1 of tax, meaning their $10 of expenses still cost them $9. So although business expenses are deductible, they are still mostly expenses. The higher the tax bracket a person or business is in, the more money the deductions would save them, but either way, the taxpayer still pays for most of the expenses. While employees don't have many, if any, deductions related to their work, they also don't have to worry about as many work expenses since their employer provides all the tech and subscriptions they need to do their job. Believe it or not, that's pretty much the shape of it. Independent contractors get to deduct business expenses on their tax returns, and employees don't, while 1099 independent contractors are also responsible for both halves of FICA taxes. However, it's important to note that as a self-employed person or a 1099 worker, it's not always the best thing to take as many deductions as you possibly can in order to lower your taxable income. That's because banks will review your taxes when considering you for a loan, such as a mortgage or car loan. When you get aggressive about having the smallest possible net income on your tax return, banks will see that smallest possible number, which will lower your odds of getting that loan. Banks also understand that life as an independent contractor is up and down. Some months you might bring in a lot of money, and some months you might bring in none. To account for this when qualifying you for a loan, they ask you for 2 years worth of income tax returns for the business, add up your income, and divide that by 24 to get an average monthly income, which they use to consider you for a loan. This means that if you work freelance and receive 1099s as your only source of income, you're going to need to wait 2 years after you start your business in order to qualify for a loan, and possibly more if you bring in small amounts in the beginning. As a side note, this balance between a higher net income and a lower tax bill comes into play in many facets of accounting, including the inventory method that businesses choose to use. I'll discuss inventory more in a future video. Contrast this with life as a W-2 employee. While banks will still want to see 2 years worth of tax returns, as long as you can show recent pay stubs with steady income, they'll have no problem approving you and heavily weighting your most current paychecks, even if you recently got a raise. I created a free quiz to help you consider whether life as an employee or an independent contractor is best for you, and I've linked to that in the description below. Let me know if you have any questions, and I'll see you in the next video. Bye!